Hi, my name is Fabian Baker. I'm the Managing Director of Kingsrose Mining. We're ASX listed. The company formerly operated the Way Linggo gold-silver mine in Indonesia, which left us cashed up with today just under $28 million in the bank. Company's seen a complete reboot in the last year, overhauled board and management team with me coming in over the last year. And we've taken on new acquisitions in Scandinavia, probably, we think, the highest grade PGE exploration project globally.
Fabian, good to see you. I haven't seen you since Tethyan days or Adriatic days. So new venture, exciting times. So when did all this kick off for you?
Absolutely. Yeah. Well, when we sort of wrapped up the deal with Adriatic, who took over Tethyan, I was involved in that transition. And then, this company, Kingsrose Mining, it's been around for quite some time, operated this gold mine in Indonesia, which early in its mine life was the highest grade gold producer on the ASX. But after about 10 years production, 2020, mining came to an end. And if I'm honest, the company didn't really seem to have a very clear direction where to go next. So I was asked to step in and basically lead an overhaul of this business and a move back to exploration.
Right. Okay. So let's be clear about what happened there is we're producing cash. What that was the Way Linggo project. You ran out of gold.
Yeah.
What happened?
So it was coming to the end of the mine life anyway. A couple of geotechnical pit wall failures, etc., accelerated the end of that operation. And it seemed that previously management sort of saw the writing on the wall and focused more on eking profit out of the end of that mine life rather than thinking about pipeline or developing those resources much further. So, it came to an end. And at that point, I think, the company was trading at below cash when I was asked to come in. So from my point of view, great opportunity to reboot this. But obviously the market had lost interest.
Well, yeah, I mean, and obviously the shareholders, some shareholders left, high and dry on that one. So help me understand, because I want to be able to sort of understand, how to make sense of this. Because you could look at it and say, I'm a very well cashed up exploration story, or you could say actually the kind of track record of the company suggests they don't really know how to plan for the future. So what exactly happened in Indonesia?
Sure. Well, the mine was put into production back in 2010. And as I say, those early years, it was 14, 15 grams gold with a great silver kicker. And it was producing gold with the best margins on the ASX, and it was doing really well. But as the mine life went on, the grades dropped, the pits got deeper, and so the mine became a bit more challenged. So that's one side of it. And then financial sort of challenges meant there was a lack of exploration spend. And so it came to that point, since which there's been pretty much a complete overhaul of who's involved. And so this new team doesn't really represent who was there at that point earlier. So we came in. This was led by our chairman, Mike Andrews, who's got an exceptional track record in Indonesia and elsewhere. I mean, more recently, he identified the potential of Windfall Lake, which is now Cisco Mining. He led his other venture into a 30% position there before it became a Cisco and so on. So we're a different team. And when I got in, we immediately reestablished an exploration team there at Way Linggo because the potential of the area is great. It's been in production for 10 years. As I say, it was very profitable. So we hit the ground running. We put a big team. We covered the entire property to assess critically from our point of view, because I am not so interested in putting this back into production at 20,000 ounces per annum, because I don't think it will move the needle for our shareholders. So we looked at it critically. Is there a nice high grade million ounces that is worth getting that back into production and being our focus going forward? We drilled some holes. We've hit some good numbers. So we expanded the resource. So we now have a 300,000 ounce resource at about 6 grams gold equivalent there. And we've made a new discovery that we're still drilling today, news on those results coming out shortly. However, in parallel, we set up a team focused on M&A, looking for the next opportunity, which I'll talk about, and that came to fruition with an acquisition in Scandinavia. And so we've made the decision that we're going to look to divest Way Linggo. So it's better suited to a local mining company who can put it into production. So we'll top up our cash and look to benefit from a royalty once that's in production again.
Perfect. Okay, so that's what I wanted, because there's this whole sort of, geographic anomaly in the sense that you're small. It's 60 million market cap, right? I know you've got cash, but it's a small team. Working in different jurisdictions can be problematic. So that's going to be divested. Have you started that process? Because like I say, the scale doesn't feel big or significant and won't move the needle, but are you in discussions with people? Do we understand the sort of quantum that might be worth?
We're in discussions. We've been running site visits for interested parties lately. So that is well underway. And we're hopeful that we can announce a transaction on that by the middle of this year. And the quantum of this, look, it's not enormous, but what we're looking for is to build on our cash position. But then, we still see a lot of potential in the project. It's not only whether today it meets our threshold, we do see longer term a lot of potential. So we want to retain that exposure. So we're aiming to bring in an entity who can put it in production effectively within the environment of Indonesia, which isn't an easy one for a foreign operator, and look to benefit from a royalty.
Okay, so royalty plus cash. Is that what I'm hearing?
That's it. That's what we're looking for.
Okay,
absolutely.
And just in terms of kind of closing off what went before and what now is, you're saying it's an entirely new team. So it's not a reboot of the company with the same team. It's an entirely new team.
The management is entirely new, and and one or two of the board members have remained. The other four are recently introduced. So total overhaul.
Okay, so we can put a wall or close the door on that. Let's look to the future. So PGE Scandinavia, very, very different from what's gone before. So, this acquisition with Element 46. Why did you go for that? Why does that tick all the boxes for you?
As I say, when I came into this, first of all, the way I saw it was, this is the building blocks now for a new company, as you say. Close the door on that history. And we have the cash. We put in this great team, which I'll tell you a little bit more about. And then it was about making sure we secure the right assets. So we were very diligent and systematic in working through what we were looking for. We prioritized from different regions of the world and the types of asset that we were looking for. And Scandinavia ticked a lot of boxes. I mean, in terms of ease of entry, me being based in Europe, the history of mining and successful mining operations, and then recent successes, the likes of Rupert on the gold side. You've got Anglo-American Sakatti, probably the best nickel copper PGE sulfide target in recent discovery. So it ticked all those boxes. We delved into the region, and in fact, a good friend of mine, Andrew Dacey, had put together this small private entity. He had spent the last 2 years in and out of the region, combing through the archives, and he put together this package of 2 projects, one in Norway called Porsanger, and then what is the flagship is called Penikat in Finland. So Penikat is a very high grade palladium dominant, so PGE with gold, nickel and copper project. And honestly, the more we looked into it, we did very thorough DD, the more encouraged we were, which doesn't generally happen that way. And so as we worked through each step, we became more and more confident in the outstanding potential of that project.
Right. Okay. And tell me about the team then, because they're going to be fit for purpose. This is like a predominantly new exploration team. Is that?
Yeah. So
maybe start with yourself, actually, because I'm not sure everyone will understand or know of your background. Start with you, and then maybe talk about some of the team who are more active than others.
Sure. So I'm a geologist from an exploration background. I was the chief geologist with Lydian International. That company discovered, and it was led and discovered by Tim Coughlin, who's also now on our board. So Tim discovered the Amulsar deposit. I worked my way to chief geologist, and we took that from a rock chip, a completely grassroots discovery, to a 5 million ounce deposit with 140 million invested through to a feasibility study. And then it's gone on to be built out into a mine. So I come from a background in exploration. I've seen projects through from inception through to feasibility. At Tethyan, that was something I founded, focused in Eastern Europe. And we put together a land package with some great targets in Serbia that was then acquired by Adriatic. And so working with me there as well was Andrew Tunningley, who's come on since then with Kingsrose. So he's now our head of exploration. He's an incredibly talented and capable exploration manager. So he's running the show in terms of our group exploration. But then local to Scandinavia, we've brought in a chap called Peter Dodds, who he was part of the Anglo-American team that discovered Sakatti. He's British, but he spent the last 10, 12 years working in Scandinavia and Greenland. So he knows the area inside out, and is really well placed to basically run our exploration. And it's been a focus on these PGE nickel copper deposits that he's operated on.
Right. Okay. And you've got money, obviously, which is great. And actually, tell me about the deal structure, because you didn't appear to pay too much cash, which is quite good.
It was a pretty good deal from our point of view. We in total will be paying about 1.4 million Australian dollars. And in total issuing about 6% of our share capital for the acquisition. So total deal value is about 4 million Australian dollars, but it's staged. So we've paid about a third of it now, and we're waiting on some drill permits to come through there. And once those come through, we pay the balance. So it's been minimal cash outlay and minimal dilution, but it's given us something really, really outstanding.
Okay, and obviously lessons from the past. I know your team wasn't involved in it, but lessons from the past. It's just, will you be doing more M&A? Because this is early stage. The size of the deal would suggest that. The data that you've got available tells us that. So, are you on the hunt for more transactions? And if so, where in the world?
We are. Yep. We still have the capacity to take on another asset, but we're going to be careful with that because, despite these looking early stage, I'll just tell you a bit more, particularly about Penikat, because there's a lot of historical information that tells us a lot about it. So we want to be careful not to dilute our focus or divert too much of our capital away from developing that potential. So we have this main project, Penikat in Finland. We have another in Norway, which is a bit more conceptual, a little bit less well understood. So in addition to those two, we'll look to take on one more drill-ready asset. And so the team are continuing to work on that. So I think you can look to see us transact on another target over the coming months. It'll either be, again, in Scandinavia, or we'll be looking in sort of similarly secure jurisdictions. So we're also, for example, considering Canada as well.
Okay.
But so Norway, that target, we've got historical drilling of 40 to 70 meters from surface at 1 to 2 grams palladium equivalent. Looks really interesting. And we're about to kick off geophysics there. So this will be the first work that's been done there since the 70s. It's 2 outcropping intrusions, well mineralized, with these sort of broad, lowish grade, sort of 1 to 2 gram palladium equivalent hits. But what we're interested in, we're seeing a lot of copper and a lot of nickel there, along with the PGE. So we're going to run an EM survey there over these intrusions to see if any massive sulfide bodies light up that we can drill test later this year.
So how do you build up a PGE story? Okay, so a lot of the PGE stories that come on our show and talk to us about it, they get very excited because palladium, platinum, etc. The data looks awesome, but it's a very small investor market for it because most people don't understand it. There's easier investments in precious metals or other battery metals. How do you tell that story? And if so, how does that affect what you look for, whether it be elsewhere in Scandinavia or Canada for the next target?
Okay, well, you're right. It's less well understood. There's a smaller market. You've had some great people come on recently on your show to explain a lot of that. Now, from our point of view, that Norway target is very interesting. But what we're looking at there is for high grade massive sulfide at depth, which we think is what the market is looking for. It's what larger companies are looking for. And actually, what I want to come on to really is Finland, because where Finland, this project stands out as very different to anything else in the market today. So the Penikat project is what we call a layered intrusion. It's the same style of mineralization as you have in the Bushveld in South Africa, the world's largest PGE producing region. And these are very large and very continuous. And on our ground, we have outcropping 25 kilometers of mapped and sampled and drilled mineralization. So the important thing about these deposits is they're very continuous. They're formed basically by these PGE, nickel, copper rich minerals settling out on the floor of the intrusion and draping the floor over many, many kilometers. And we see that. However, it's only been drilled in 95 drill holes on our ground, but only to an average depth of 45 meters. But it shows consistently hitting this over, well, we have 10 kilometers of strike that have been drilled. The grades are outstanding. We don't see anything else like this in the market today. So we recently resampled 28 of the historical drill holes, and we're getting multiple hits at 10 grams plus palladium equivalent. And this is what sets us apart really from anything else in the market today. It is a niche industry, and all of the production comes really from the bushveld in South Africa, which are these narrow, high-grade underground mines predominantly. There's some production in the US, but then you've got the major palladium producer in Russia, at Norilsk. South Africa is struggling. Okay. The mines are old. They're getting deeper. They're getting lower grade. They're being hit with power shortages, labor issues, etc. So those mines are starting to struggle for obvious reasons. Sourcing your palladium from Russia is getting more and more challenging and less desirable. So where do people go next? And everything else that is coming into the market in the junior space is generally these lower grade bulk tonnage open pit type targets. You don't see those in production today. There are very few like that in production. And that's why we like Penikat, because it's not 1 or 2 grams, it's 5 to 10 grams. And it's consistent over many kilometers and down dip. And what it allows us to look at building is a mine that is absolutely alike the things that are in production today. So we're looking at an underground, fully mechanized, electric fleet operation that's producing a high-grade quality concentrate that is similar to what is being processed by refineries and smelters in South Africa today. And that's what sets this project apart.
Okay, I buy the kind of scarcity argument. Okay, for sure. You know, the demand numbers, like I say, we have people on the show talking, certainly in the cruxinvestor.com private investor area. We've had people come on and explain how the market works, and I get that. And what you've got laid out in front of you is indeed quite appealing. I understand but how do you play it, right? How do you play it in the context that the market doesn't really kind of get it, understand it, or and therefore, you know, maybe I say have easier investments to make elsewhere? Because I like what companies like Rupert Resources have done in Scandinavia. They've worked out how to kind of tell their story. Obviously, that's gold, but they've worked out how to kind of tell the Scandinavian story. They've worked out how to kind of create layers of stories. You're in the advantageous position of having a ton of cash, maybe a little bit more if you offload Indonesia. How do you build this company up? What do you need to do at Penikat? Yeah. That's what I'm intrigued by, because people come and talk about potential all the time, right? I'm like, great. Yeah. What do you do?
Yeah. Sure. Well, I think it's through executing on the plan, you know, and whereas maybe in the gold space, a drill hole can light up the market. Here, what we need to do is show not one drill hole after drill hole, developing and defining an ore body, which we can then look to put some economics around with a PEA. And we're in a position today where we are fully funded to take this through to drilling, through to a maiden resource, and through to a PEA without having to raise any more money. Okay, so that is how we will demonstrate the value in this project. And when we demonstrate that sort of value in an asset that is also situated in Finland, and you can stand on the project and look to the horizon at the town of Kemi. Kemi is the major northern port in Finland, where there's one of Europe's largest underground mines run by Outokumpu. So the Kemi chrome mine is on our doorstep. You've got a port. It's the major shipping port for all of the timber out of that region. So we've got all of the infrastructure we could need. It's an established mining district in the heart of Europe, producing a critical, what is defined by the EU as a critical metal, outside of Russia. and separate from those challenges that South Africa are seeing. So when we demonstrate that through executing on our plan, then I think the value will become evident. And just to say that the only thing really coming online at the moment that's similar is Ivanhoe's Platreef project, also in South Africa. They just put out an updated feasibility study. They've had to put a 1,000-meter shaft in to get to the top of the ore body. And at today's prices, it has a $4 billion NPV after tax. We have a similar scale asset that outcrops, and it's in Finland. I mean, the potential of this project really is outstanding. And as I say, it's been drilled historically. We verified that through our sampling. The last resampling we did has 5 drill holes over 2 kilometers of strike, each hitting between 1.6 and 2.6 meter intervals at 10 to 13 grams palladium equivalent. At those grades from surface, we really see a very clear track we know how to drill this. It's already there, laid out for us. The exploration risk is small. We know exactly what our drill plan will look like, and we know how to take this and execute it through a resource and PEA. Okay,
you're fully funded to get through to that point. How long is that going to take you? Do you expedite matters, or do you have a kind of steady flow of information that's going to come to market over the next what period?
Well, so the timeline is more challenging. It is a bit extended. So in Finland, we have a permitting process that involves what's called a Natura 2000 area, which is an area with a heightened environmental sensitivity. It's the same as other entities are dealing with, such as Mawson in Finland or Anglo-American at Sakatti. Now, Natura covers 16% of the EU's landmass. It's not a national park. It's not a ban on mining. In fact, the Council of Lapland, that regional government, has recently announced that they support the development of mines in these areas. But it means that we need to do things stepwise and the right way. So we've just hired a head of sustainability. She's Finland's leading expert on sustainable mining practices. She's come on full time with us to basically lead a permitting process, which is this summer going through habitat and species surveys that get submitted with our drill plans later this year, and basically means that we should be permitted and ready to start drilling in the winter of 2023, so next year. So there is an extended time frame of 12 to 18 months to actually get drilling on that project.
Okay,
so in the meantime,
give me the meantime.
So in the meantime, we've been in the archives. We've pulled out the historical core. We've verified a lot of that. We've got now samples off for rhodium assays because we're seeing evidence that there could be some additional high grade rhodium just to add to the value per ton of this rock. We're also going to be looking at some mineralogical studies and so on to give us some feel for metallurgy. So we can look, we are looking at this not just as an exploration project, as a serious development towards a PEA and demonstrating that there's a viable mine there.
Right. Just in terms of timing, right? So say when drilling potentially winter 2023, right? So more than a year away. You kind of got to keep that momentum going in the marketplace where people lose interest, especially given the history, right? Not your fault, but given the history. So the question earlier about M&A, it becomes, I suspect, quite important to you because you need to, one, have a story to tell, but two, maybe it needs to be slightly more advanced than either of the projects that you're looking at in Norway and Finland.
That's right. So we do have Norway this year that will fill some of that gap. So we've got the geophysics kicking off in a couple of weeks, and then we're going to be drilling that this summer. So there's activity there, and there's a real shot at a discovery. That's an incredible area. We have a large area with high grade intrusions, and we also have these overlying sediments. We've walked out 10 kilometers of these sediments with copper oozing out of them. Now we don't see that as the target, but what we're seeing there is prolific mineralization across a large district with evidence of these intrusions, which are the conduits for bringing in these types of massive sulfide copper nickel. So that's a really exciting exploration project that's going to go through that sort of quite classic exploration sort of process of geophysics, mapping and drilling this year. So that to some extent fills a gap. Right. But then the M&A, as you're saying, is key for us as well. So we're not dragging our heels on that. And yes, it does need to be more advanced, and particularly from a permitting point of view. So in all of our work, what we've done in terms of M&A is try to find that sweet spot where the initial discovery has been made, where we're seeing ore grade material, and our geological team with our expertise can see a geological concept for how that gets bigger, for how we can add value. So we're trying to find that sweet spot where the initial discovery is made, but that value through resource growth and definition hasn't been done yet. So yes, we need to find and bring into the fold another asset that ticks those boxes, where we've got a clear starting point to put those first few drill holes into and expand on and keep a drill program rolling.
Yeah, and not overpay and not use up the free cash that you've got at the moment. Yep. So that's a balancing act, and there's going to be a lot of people in the hunt for the same thing, one suspects, but at least you're in the region.
I think we've shown us, this deal, a lot of people have looked at this and gone, wow, in this market, how on earth did you get assets of that quality at that price? So we do have, I think, a seasoned team. If you look at our board, it is quite exceptional, the track record. I mean, John Carlisle led Newcrest's exploration outside of Australia, discovered the 6 million ounce Gosowong district in Indonesia. I mentioned Mike Andrews and before. We've also got Tim Coughlin, who discovered Amulsar with Lydian, and prior to that, he was the chief geologist for Anglo Gold throughout all of South America, and is recently doing some great stuff with his company, Royal Road Minerals there. So we've got a team that have the ability to identify and transact on opportunities, and we're nimble enough to do it. We're well cashed up, but we don't have that sort of behemoth of a business that can't move quickly on assets. So we'll look to bring another into the fold, and I think we have the capacity to take that on without impacting the potential on Penikat. So Penikat long term, if you can look out 2 to 3 years, we see that underpins massive value in Kingsrose, and we have huge confidence in that. We have ring-fenced the money that we need to take that through a maiden resource, an updated resource, and a PEA. Okay, and in total, that is a 2 to 3 year process, costing us 10 to 12 million Australian dollars. Okay, on Norway, we've got a smaller program this year to see what that throws up, and we'll see, whether that continues or not. But in the first instance, we're going to spend between 1 and 1.5 million to do that initial drill testing and geophysics there. And this leaves us with 3 years G&A taken into an account, with comfortably $5 million to put towards drilling and advancing another asset. So we've mapped that out. As I say, we have that underpinning of value with Penikat, and then we've got further cash to come in, which wasn't accounted for in that sort of back of the envelope math. That additional cash coming in from Way Linggo being sold. Right. So I think, as I was saying at the beginning, what I have tried to do here, and without trying to overpromise or rush something here, is put in place the building blocks for a successful exploration company, a real exploration company into the future. So team, cash, and project.
Which is brilliant. And that lays out. Thanks for breaking down the allocation of capital use proceeds, as it were. You do have this massive overhang of, again, from the past, right? You've got a story to tell. You've got some persuading to do. If you look at that kind of ride down from 2018 to the lows of mid 2020, it's been steadily increasing. But your share price is today where it was 5 years ago, right? So you've got a bunch of probably not very happy shareholders as an overhang here. It would be reasonable that they would want out. How do you turn the register over? Because you're going to need to do that, which I presume is predominantly retail at this point, is it?
It is predominantly retail. Our largest shareholder is our chairman. He's bought his position of 10% in the company. We have a couple of other larger sort of holders, which are also high net worth. I would say a lot of that churning through sort of legacy shareholders has happened to a large extent through this year. So since I and the rest of the team joined, we've more than doubled the share price from sort of 3.5 cents to 8 cents plus. And we've had significant volumes. Over the last 6 months, we've been trading 2 to 5 million shares a day, sort of $200,000 to $400,000 a day. So there's a lot of stock that's changed hands, and I'm very in touch with our shareholders. And we have had those trade out. We've had former directors and that sort of legacy group have been in touch with me, and they have traded out. And so as I see it today, we have a core of legacy shareholders and new shareholders who are all really excited about the future of this company. And so I think we've been through a lot of that process, and these guys see the story, they see what we're trying to achieve, and they're now in it for the long haul.
Fabian, thanks very much for today.
Thanks very much, Matthew.